afternoon, good evening. Welcome to Traders Workshop. Traders Workshop, where we like to bring in our NinjaTrader ecosystem experts and have them explain to you, the trader, what their expertise is and how they can help you. My name is Tom Schneider, CMT with NinjaTrader. And before we get into the good stuff, I do want to remind everybody that futures and options trading contains substantial risk, not for every trader. You could potentially lose all or even more than all of your initial investment. That's why we recommend you use risk capital. What is risk capital? It's money you can afford to lose, doesn't keep you up at night, doesn't extend your retirement horizon. Also want to remind everybody that past performance is not necessarily indicative of future results. And what we talk about here in this program contains neither trade recommendations nor financial advice and should be taken for educational purposes only. And with that, it's my pleasure to welcome our first-time guest, Jim Marzano from Metrics. Jim is the CEO and founder of Metrics. He's a futures industry professional. How are you doing, Jim?
I'm great. Thanks, Tom.
And where are we dialing in from, Jim?
I'm coming in from just north of Chicago in Lake Forest, Illinois.
Yeah, that's it's great to hear. That's where I grew up, and always good to hear when somebody's calling in from the Chicago area. Being in the futures industry, right? Chicago is kind of the hotspot, right?
Yes.
So, Jim, let the viewers know. And by the way, viewers, if you're watching on YouTube, thanks so much. Hit the like button, hit the subscribe button, hit the share button. But if you want to participate in the chat, if you want to ask Jim some questions while the show is going on, you can go over to ninjatrader.com/events, click the play button, and the chat window will appear. You can pose your questions to Jim while this is going on. So, Jim, we usually start out with a hi, how you doing? But if you could tell us a little bit about your background, how did you get into the financial industry?
Well, I got in the early days of financial futures. In fact, I was fortunate enough to be one of the original 28, what we called permit holders at that time, that traded Ginnie Mae futures. And the idea was the permit was to have people that would be dedicated, or as we said, chained to the Ginnie Mae pit. So we were allowed to be on the floor at the time without a full membership if we agreed to trade and broker, et cetera, just this one item. And Ginnie Mae's was one of the first contracts that showed you could trade money as a commodity. That was really the breakthrough at the time. So the Ginnie Mae stands for Government National Mortgage Association. It was only about an 8-year-old security at the time. And before that, anybody getting a mortgage, once their bank savings and loan or a mortgage banker would originate that loan, they couldn't really turn around and sell it in the secondary market as a pool. They had to sell it literally loan by loan. So I don't see Jim Cagnina's face here, so we can pick on him. But if Jim Cagnina's loan was in there and it was going to pay down fast, which is very normal, people move, get another house, it really changed the dynamics, obviously, of the yield that an investor would get. Ginnie Mae was backed by the government, and all of the people that originating loans, the savings and loans, et cetera, could originate a Ginnie Mae certificate backed by the actual mortgage. And that then became the pool. And it would be a little easier for someone buying a pool that had Jim Cagnina's mortgage on it, because there were probably 12 or 15 mortgages in that pool. So the actual return or history of one wouldn't be as dilutive as if it was just a single loan. So that was the idea. And that started in the mid-'70s. And then the Board of Trade, fortunately, started trading government securities bonds. And the 30-year Treasury that you see today was started then. And truth be told, I actually made the first trade.
Now, so when you say you were a permit holder of the Ginnie Mae's, how long did that last? Because like you just said, there were other contracts you eventually
There were
traded.
other contracts. The good news is we basically got a toehold in the industry. So on the floor, I dealt with customers, arbitrageurs. I actually would hop between my phone booth and the pit, fill the order. So it was a pretty vertical integration. From there, though, we found that the liquidity really wasn't growing in the mortgage future, whether it was a Ginnie Mae, they had introduced a second contract. And since, like everything else today, mortgages and literally most everything will trade somewhere off the treasury curve, the Board of Trade got approval to trade a treasury instrument, and that it just basically everything exploded within a year or two after that. I became a full member and stayed for almost 25 years.
Well, and were you trading for yourself? Were you trading for another company? How were you trading?
A little bit for myself. I still had trading orders. 1980, I started a clearing firm, so I became able to deal and clear transactions. We expanded that business to include arbitrage finance, where people would take delivery of, let's say, the actual treasury, hedge it with a future, and then come to somebody like us. We had market makers. I ran that operation as well. That would just make a bid on that, cash versus futures portfolio. And so that lasted a long time as well.
And so this is you were there in the early days of the bond markets in Chicago, but it seems like a large leap to where you are now, in the sense that I know what you're going to talk about, so I have a little bit of a preview.
Mm-hmm.
How did you get from there's a whole bunch of history there that explains your trading days to your, what I would call, alternative data now, but we'll get to that. How can you fill in those that experience that got you there?
Yeah, I mean, in those days, the information flow was really very small. Bloomberg was not started. Bloomberg didn't start till like 87. So we had a long period of time where trying to get data on underlying, let's say, treasury instruments was close to impossible. The second thing is, in the same way, instruments, let's say, price off the treasury curve. If you look at any standard commodity market, and really the only commodities we had on the Board of Trade, obviously, were grains. We did have a silver contract. We had a plywood contract, a few others that came and went. But the understanding then and today is, what is the market internalizing in terms of, if you think about it, the yield. And so if we find a market in contango, which everybody needs to understand, where the deferred futures are trading higher than the spot, if that spread went to what's called full carry, meaning you would iterate the cost of storage, insurance, and financing, and within that, whether you borrowed or not, what was the return on your money as expressed by that contango. So if you understood that, and again, you understood how the interest rate role was played in that transaction, you really had an edge. So for a long time, we were doing that. Basically, I still have my HP calculator, and we were doing that way. And then I got early into computers to automate that and have better, basically, decision support information. Again, I built it for myself, but as time went on, there were more people that wanted that. So if I fast forward to the next phase, the customers I worked with were mostly institutional hedgers, all mostly in the financial markets, and all having not only that problem of understanding the markets, ironically, they had a bigger problem understanding just something as simple as their trading statement. So if you look at an institutional user, and we worked with the largest private and the largest public pension funds, most of them had at least 5, but in one case, 15 different brokers. And so I built a system that kind of leveraged on the informational things I had built to basically create a digitized version of the statement. And we did that independently so we could aggregate the data. And that was the early underpinning of metrics. And what we are doing now is consolidating, curating, and then distributing data from multiple providers. In the same way, the different accounting systems at different brokers, didn't talk to each other. We now do that with market data.
Okay, so and the data that you're using, are you you're getting this data from different market providers, but you're also making your own data, right? I mean, you're also
Yes,
doing your own calculations. You're also using your observations in the markets and creating your own data that could be helpful to traders.
right. So we've,
Go
sorry,
ahead.
go ahead.
No, please.
So we have found a few types of data that not even 5 years ago existed, much less when we started this whole process some years ago. And there's two of them that we found to be really stand out in terms of being unique and also have a value in explaining the market dynamics. And so the first one is social media, the tweets, the Instagrams, Facebook, whatever. And that's become literally a fire hose of data. Uh, and it's also like everything else in the early stages. It's misused. It's probably misunderstood. Most of all, though, it was in an alpha form, meaning you have to read this story or this tweet and understand what the author's trying to say. What I'll show you is how that is now completely numeric fire hose, of which now, again, with computerization and some database technology, we're able to put into a form where anybody can understand what's going on. So that's number one. Number two, from our friends at NinjaTrader, we've been working with the volumetric data, which allows us to understand the microstructure of the markets as expressed by footprint data. So by that I mean, anyone who's listening has probably seen the market profile, maybe also understand the footprint charting, that this is basically keeping track of the buyer and seller actual transaction. And from there, we can infer a lot of information so that, let's say, the volume of trade by buyer, the volume of trade by seller, and that's calculated, by the way, by a buy or sell market order, with the presumption that if it's a market order, this person's not concerned per se with actual price. He wants in or he wants out. And so the value of that, buy order to buy or sell just goes up a notch or two. And then you have the whole side of calculating as this rolls on. And now you can start to understand, let's say, change in volume as it relates to change in price. If we then add our sentiment data from that, we end up with a few indicators that really have a lead as opposed to lag characteristic. And that's, in a nutshell, what we are doing at Metrics.
So combining the sentiment that you can scrape, or if you said fire hose, so you aggregate the whole fire hose,
right? And
combining it with the footprint charts. Now we've talked about footprint charts before here on Traders Workshop, and basically it's the buyers and the sellers. It's the trades happening at the bid and the ask, and you can make some conclusions, or you can come to some conclusions based on the differential and by the change in
right.
those values. So it's a really neat chart, footprint chart that's on NinjaTrader. So let's do this. Maybe we can take a look at some of that data.
Right, and
there's something you want to head
what
up
we also
first.
do is provide in our full stack of data and analytics a search engine. So again, going back to the floor, everyone said, "Did you see the chart on corn, for example?" Well, I'm on two phones and trying to look at the board to see where the corn is trading, so I really don't have any time to look at a chart. And so we've designed just about everything we do. If looking at a chart is your quote pulling data, everything we do is basically pushed. So for instance, in our relationship with volumetric data from Kinetic, we take a feed, we process that, and then we're able to push everything out. We push it out in a couple of different ways. So I thought what I'd show today is the most important part of that, which is our search engine, where everything sits. Let me just share that. Is that screen shared? Okay. Okay, great.
There.
So what I've got here is a stocks based on a 15-minute valuation. What we're doing here is, if you think of a spreadsheet, we've basically, with our application at Polymer Search, taken all the different headings in what our whole sentiment group of analytics. We've created, we break it down by sector. So I can take a look at just a sector in the market. I can get that data. If I want to drill down, I can create my own gallery. And again, this just, it makes the access to the data as easy as Googling anything. And the power behind Polymer Search, our ex-Google engineers, and we've been working with it for about a year, and it's turned out to be very well. So this is also all driven by Google Sheets, which are driven, let's say, by, in the example, your volumetric data. But we also create stocks, futures, ETFs. We'll do FX. And then we're working on a trader's workbook, which basically puts everything together and uses the DOM ladder as kind of your demarcation or GPS to where's the market now. And then we're able to do some other pieces with that. The other nice thing about this report is that there's a whole insight section here, which allows me to create any kind of report I want. So I've built some pivot tables here. I can, basically click on those. There's also an AI section here, which allows me to just generate more reports. And so if I'm really trying to, drill down on a stock or a future ETF and see what is either the social media segment of this, or again, when we integrate the footprint data, I can show you that in spreadsheet. But we're basically able to do everything where we can drill down. There'll be historical access to this. And lastly, users can customize these. If they're savvy enough with Excel or Google, this has a very simple download feature. Got to get all these pictures out of the way. There we go. So all of this is pretty simple to use. If I go back just to the data, you'll see that up here, I have my own workspace. And that workspace is where we ship everything every day. So you go to it once, that sheet is now in your search engine. It's all configured to talk to Ninja. So if it's price it's getting, it's talking to our feed for social media, and then some other feeds for news, insights. We have a new contributor coming on that does option, kind of the exceptions, what's the unusual option activity. But as you can see, this is very simple to load. We were just looking at stock, which we did in this particular sheet on a 15-minute basis. I'll open that up on a futures, and we'll just do that for a 1-minute basis. So I have no new data. This was just updated. And you can see I've done the same kind of setup, same kind of gallery. Any item in here, S-score is the actual raw sentiment data. But as you can see, then there's a lot of calculations that if you want to use them, fine. This is great to drive your own algos. It's also great to just see what's going on. I always look at this. It looks interesting where there's no score in the yen futures, and that's because they only had 4 tweets. Now, if more people come in, you'll see that score expand. The volatility doesn't seem that bad. I can very quickly see what's been the change in volatility. So I recalculate, and not unexpectedly, the volatility sentiment-wise in the Bitcoin futures is leading the pack until you get down to some of the nat gas or vol futures. But again, just take a look at those numbers. Big changes. So this is a good example of, here is basically the context of the market. When we were in a face-to-face, on trading floor trading method, we basically could understand this in a lot of ways. First of all, there may not be that many people in the pit, or there'd be a lot of people in the pit. Secondly, we had the big advantage that you've basically lost in electronic trading, and it may sound simplistic, but it's noise. So on the trading floor, you might hear something, a lot of change in volume, where the decibel level went way up in soybean oil, and that would react to a change, let's say, in volume or a change in volatility. All the things now, and I would never advocate we go back to the trading on the floor. So we basically put these together in different ways. Let me see if I can move you out of the way again. Let me move over to the last thing I want to talk about on this particular item. And that is our own, as you said, our own data. We have our own scoring algorithm. So if you think about, and I'm taking these in different order, there's probably 15 columns of data here, and kind of analogous to which mortgage is the problem. We take all these statistics in and run them through an advanced math algo called principal component analysis. And what the math does is figure out, what's driving the bus here, so to speak. And then we've converted that to a single number that we call the MCP. So now you can value the entire marketplace here with the MCP. And it looks like this caused a lot of issues here in terms of where the market went. So we got change in delta. We've got delta going up. You can search for any of this. And then again, if you want, you can just create any kind of a spreadsheet you want to download it. So maybe I'll stop there, keep an eye on the clock, see if we've got any questions.
So I have some questions, Jim.
All right.
Twitter sentiment or social media sentiment. I keep saying Twitter, but it's really social media sentiment because you've mentioned other platforms.
Right.
Can you just explain, because I think some of our viewers might have the same questions or thoughts that I did when you first mentioned it. And I've dealt with Twitter aggregation before in another role at another company. And the same kind of thoughts I think you addressed right away when we were talking about it. But can you explain how you ensure that the Twitter sentiment, the Facebook sentiment, the Instagram, whatever it is, social media sentiment is relevant to what we as a trader are interested in versus something that might not be relevant to what we're trying to do here?
Okay. Let me share one of them here.
And the reason why I ask that is because, if anybody's used Twitter, let's say, that sometimes there are things said that have nothing to do with what we're trying to do. Somebody mentions a company, Coke. I had a Coke today, or I ate at McDonald's today, or I don't know why you tweet that, but okay. So that really doesn't have much to do other than the fact that somebody took the time to express that view. That might factor into your sentiment. Well, what do you think?
Right.
What are your thoughts about that?
Well, as they say, volume takes all that off the table to a great degree. So when I see something where I've got a single digit number of tweets, I would just ignore the data. It's just not enough volume to play with it. Where you see a large number of tweets, and I've got I just showed you the spreadsheet here, that individual traders that want to do their own pivot tables or write their own algos basically have the data here. So they can create their own time series. And from there, answer to your question would be, if I watch this long enough and I own, or I'm thinking of owning, let's say Apple or AbbVie, any of these, I can develop history from that. The second thing is, if now we go back and look at the footprint chart, and we're doing that right now in futures. We'll do stock, but that's like a number of fire hoses. So we're working on the volume right now. But those two items will give you, I think, the kind of governor of data that says this stuff is spurless, because the volume of data is so large and the consistency of the algo has been pretty well tested. Hopefully that goes away. Can people change that? Yeah. But if I look at raw tweets a year ago or 2 years ago when, Hertz has a 30% move up after it announces bankruptcy, or GameStop goes up 70% in an hour. My first reaction as a trader is to say, well, the pump and dump guys, or the touts, as the Brits call them, are in the game. We're just going to talk this up because we bought a lot and we just want to see the market go up. But the rest of these statistics belie what any one spurless or bad actor, can influence. So the short answer is safety in numbers.
Very good. Yeah, no, that's great. That's a good explanation. And what's interesting about that is, well, question for you then, I guess, coming off of that, you said people can make their own historical data, their own time series data.
Mm-hmm.
Can they also can they manipulate it? So if there are different factors that you've provided, can they take and create their own weightings of rankings and all that good stuff?
So they can do that. Again, I think most traders are savvy in spreadsheets. That's our big bet, if you will. We've delivered the kind of data aggregation and database access techniques I mentioned, and the front end of choice was always Excel. They don't want the fancy application. They don't want to wait. They want the data. They want it now. And then the beauty of it is they can download it. And so this workbook comes every day. I can show you what I get in my email, and that's how it comes. Once you load it, as you saw in the Polymer application, that continues to refresh all day. And then the customer, if they want, real time, they can come to their friendly Ninja outlet and buy real time data. If they want the 15 delayed, or they want, hourly, that's all possible. So it also keeps an eye on what's the expense of all this. So you've got the ability to control cost as well. Lastly, for those customers that, let's say, either aren't savvy in spreadsheets or have let's say, a more sophisticated or more unique requirement, we'll build custom sheets, and then they come out in the same way. So if you like relationships between, a certain ETF, and you want to see the social media sentiment on the underlying stocks that are pricing that, and then you can use our MCP or your own method to independently value that. All doable, very short time, and pretty cost effective.
Great. Question for you is, we've seen a lot in the equities world. Can we take a look, and because we're starting the new year, yesterday markets were closed in the futures market. We've got a new day, new year. Is it possible to take a look at the futures and kind of maybe compare it or bring it back to what's going on today? Because we know that the markets kind of ran up pre-market, and then sellers came in at the news or the lack of good news. Sellers were knocking the market down. Is it possible to see what the sentiment indicators or the MCP data would be for, let's say, the E-mini S&P today?
Okay, let's see if I can do that. So I'm going to go back and just look, first of all, update this, although it looks like it's pretty updated. And then I can just go to my gallery. And we don't take in live pricing feeds in this application. There were some alerts there I saw. And these were coming up early. This goes back to early this morning. So let's come down and see what happened with ES. And I can search it differently. Normally what I would do is put up a pivot table. But I don't have live feeds coming in, so I could take a look at the social media sentiment on that.
I think what's really interesting about that view you just had, though, was the consensus that, as you've defined it,
right,
give you alerts, what you call alerts, which could be no alert, or there's something happening here and here's an action to take, right? And
yes,
given the language that you use, it's easy, as a trader to say buy and sell, just for compliance reasons, we always say past performance not indicative of future results. These aren't recommendations. It's just
Right.
language in here, right? So
Exactly.
it could be bullish sentiment on Nikkei, or bullish sentiment on the mini Russell, or bearish sentiment, right? And so what I think is really interesting is it's right there at the top, right? It's
Yeah.
right there to say what your idea is about that market. I think that's great.
Sure. So if I open that, I can get the statistics. I have a ticker. Um, we all understand the requirements to disclaim, as you did in the beginning. What is this based on? This is risk. This is not in any way a recommendation to buy or sell. And that's in our disclaimers as well. The fact of the matter is, what we're saying is statistically, and by the way we analyze data, the conditions are right for this market to go lower, i.e., there's a sell alert. And when we add the footprint data, we've got another sheet that provides a trader, we call a trader cheat sheet or worksheet. And I can show you an example of that. We haven't released it yet, so we're a little ahead of the game, but I can put that up in a second. But that answers your question, hopefully.
And can you, and so the follow-up question is, these are alert messages that you've defined. Can the user tweak them? Can they change?
Yes.
Like the requirements for that alert message might be a different threshold, or it might be a different combination of indications. Not knowing what's in those alerts, the user can tweak those.
Right.
Oh, great.
So if I go back to let me go back to, we were just talking about stocks. Looks like I got a little, let's see if we come back to this. Yeah, the bottom line is this whole gal rate gives you all of the underlying variables. And so if you want to say, I want to weight that's the other beauty of not only the pivot table, but a pivot table that most people will keep in Excel or a Google sheet, where their weights, let's say the financial calculator is already embedded, or they go to a service like Calculator Soup and they want to do regression analysis. They want to do any kind of, let's say, Black-Scholes, anything, random walk. You can put anything in there, develop your own machine learning pack. So our reason to sit at the table is we bring the data. All these analytics are, pre-configured. But if you want to change any of the analytics, that's fine. And we encourage that. And then let me stop here for a second and see if I can grab one other piece.
Yeah, we might need to share your screen again.
Yeah, I'm trying to see if I have it in this. I'm on two machines, so I don't think I can show you the new one, and I don't want to get in trouble either.
Okay. So you mentioned, while we're doing that, you mentioned options, unusual activity in options. That's another feature that you're developing right now.
Right.
Hasn't been incorporated yet, but will be in the future.
Right. And that's coming from a provider. So the provider, our business model is we're basically aiming to become the Amazon of financial software, financial data, and analytics and opinion. So if we're a little high in our aim, these are basically the underlying pinnings that Bloomberg or Refinitiv or in a lot of ways what Ninja does specifically, not that we're competing with Ninja, where you've got data and functionality. And thirdly, you've got like our search engine or an Excel sheet or a Google sheet. You've got a way to take that data down where now you can keep it, you can share it, and most importantly, to your point, you can manipulate it.
Let's see if we can bring that sheet back up. It's interesting, Jim, when I was at Bloomberg, a lot of what we did was, initially improving the charting software, and that
Mhm.
was easy to do. At Bloomberg, it wasn't very good when we got there. But then it in the last, I would say, 10 years has been focusing on what other data sets are there. Data. The thought was data is the future. It's like oil, right? Data is the
Yeah.
new oil, and this is right in line with that. The Twitter sentiment. There's data out there, and it's how you can manipulate the data to provide value, and provide value it quickly, in a digestible way. That's what we were focused on. I
Mhm.
would say, my latter years there, and I'm sure that's, certainly what I see in metrics.
Well, everybody goes to school, I think, at some stage on the rest of the people that are in the game, and obviously those that have been successful. What we've looked at with specifically with Bloomberg, let me see if I can share the screen with you, uh, is he's gone to the fact that there's too much data. There's too many functions. I think there's over, and you'd know better than I, there's over what, 35,000 functions in Bloomberg? Who'd
You're
live with?
off by about 10, a factor
Okay,
of
well,
10. Yeah,
I'm,
it's a
I
lot.
haven't looked for a while either.
Yeah, yeah.
But the big thing that with Bloomberg that also doesn't help any really individual traders, frankly, is just the cost. I mean,
Sure.
when you subscribe to Bloomberg, you're signing basically a $50,000 agreement. It's
Yep.
a $2,500 a month. It's a 2-year minimum. Death won't get you out of the contract. So that's a lot to bite off. Our numbers are in the $100 to $200 per month range. We don't require a contract. We'll do some custom work and make the functions that you really want, available to you.
Yep.
And again, now it becomes much more your platform. And with the search engine, you've got so much you can do with it. Let me see if I can do one other thing. Yeah, I don't think the slides are going to work. Okay. So let me just come back to the.
Yeah, let's go back to the spreadsheet. Yeah.
You want to come back to the spreadsheet?
Yeah, that's fine.
Okay. Okay, we'll share that.
Let's see.
Okay.
There we go.
Let me just show you while we're here, kind of, and we do these in multiple spreadsheets. We can sell or send, I should say, many different kinds. Let me see if we've got there we go. So here's a sorted, this is kind of pre-sorted to what are the top and bottom futures today. This is a good sheet for what social media, more to your question a few minutes ago, doing to the markets. So this report is running continually. I can update that. This is one little, we're going to see if we can script that, but this also brings up the point. We're not bringing in live data, so we're not adding that cost and having to put it on. The assumption, obviously, is most people are already getting market data and they're getting in a time frame, a cost, and a provider they're already happy with. And critically, I want to point out, we're not in the same speed race as it relates to time. So latency is not our concern. Research doesn't generate every, nanosecond. So this is like updated every minute, and you're not going to get an analytic value you can summarize. One, less than a minute. Two, if you do, the noise is unbelievable. So for anybody who's built a trading system or added weights to existing analytic providers like ourselves, that's the whole program. So I've just looked at this quickly. I can, just again, this is the nice part about having the search engine. And now the vol future, if the market's getting hit, so to speak, you can see where these scores are going down. And these scores also go across different ways. We've made this sheet smaller so people can get at, very whatever they want to see very quickly. And again, it's just a matter, I can slip back to the gallery and now I can see what those changes are.
So I really like the concept of ranking the futures, right? Or ranking
Hmm.
stocks if you're into stocks, and seeing what are the top and bottom. And the top and bottom defaults to the MCP score, I'm assuming,
Hmm.
but you could sort that as well. So you could say, you know what, I want to look at it in terms of a sentiment score, or maybe it's, like you said, volatility, maybe something on the footprint chart that I want to do top and bottom. Can I do that here?
Right. So we're integrating kind of the normal request from the footprint side, just as an example, which is that buy and sell volume. So I've got, 40 columns of data from volumetric. I don't have to look at a chart. I can just sort right here and show me by volatility, by volume. What's the delta? What's the change in the volume deltas? And I can push those out as well. So if you want to get a text, and you're a metric subscriber, we just need where you want the text sent to. So,
Okay. Question for you. Now, when you first showed this chart, the sheet, natural gas was right up there
mm-hmm.
as, and so, it leads me to think, well, this morning when Jim and I were preparing for the opening range show, I sent him on our internal messaging system. I said, "Oh, nat gas down big," or whatever. It was a quick comment, but
Mm-hmm.
I would imagine maybe other people are doing something similar to their friends on social media, right? Or just putting out something about natural gas. Is there kind of a circular or spiraling uh, factor going on here where the market's down? I'm going to react by saying, "Hey, the market's down," right? And then it builds up that volume of social media sentiment.
Mm-hmm.
Is that something that you factor in here? Is it, because it combining with the footprint chart, it does seem like, hey, this is more leading than lagging. But how much of that is factored into the score of just people reacting and noticing versus, hey, I think this will go down, versus, hey, this is going down.
Well, the score, that kind of brings up why we have so many different variables here. The score is generated by the tweet, and the tweets are basically going real time as well. But what's good about the scoring, and this data comes in unstructured and goes out in a formatted, structured way. So you can query it. You can take a sip out of the fire hose. The point is that everyone's going to have a different reaction or a different way to apply that. They also have obviously multiple time frames from, the day trader to the, high frequency person to a portfolio guy says, I want to keep an eye on that. And the hedger says, I'm thrilled that nat gas is going down. I'm a net buyer. Maybe I can hold off and make my purchases down the road. So markets, the beauty of the markets is you still have the confluence of all the different individuals and individual interests. So that is why the data, if we make that universal, easy to understand, and again, searchable, everybody, the appeal, hopefully, of our service is pretty broad.
Awesome. So before we finish up, because I think I said 45 minutes is going to go by fast.
Yeah.
We have a couple questions. So, how long until live data will be utilized? They're asking specifically about live data.
Live data is here now. It's just an option.
Okay.
And so we can move some of this, if not all of it. This is what we're kind of just finishing into a Ninja study where you've already got the data. So we can do it that way. We can also bring the volumetric data as we have to the spreadsheet. So that's a matter then of us and Kinetic basically putting together a schedule. Here's the data. Here's, we don't touch the cost or the pricing. We're not a vendor of record. We publish our data. Interestingly, we can publish a derivation of our data to meet user needs. And if that in fact then includes live pricing, then that's just a requirement of that subscriber. But we're ready to go with it.
Right. Awesome. So, Jim, let's finish strong. Where can people find you if they want to continue this conversation?
Well, we'd love them to go to metrics.com, METRIXX. And let me put when you'll see on the website. Let me share that.
And do you have a social media presence, or is it all through the website?
We do everything through the website, but we're starting with, we want to be careful about what we do with all the social media, make sure we have a full enough disclaimer. So if we can move our attorney a little quicker here, we're going to be able to do that pretty quickly. But if you would just go here, if you have an account, you can register, start a 7-day trial, and give us a call. We don't ask for a credit card. We'd like to have you try it. We obviously welcome comments, criticisms, and that's, we'd like people to use it. You get the subscription includes the M-Search search engine, but that's, it takes maybe a few minutes to look at that. There's separate videos and understand it. I always say, if I can do it like that, anybody can.
Awesome. Great. Jim, thanks so much for being our guest here on Traders Workshop. And we look forward to the next time we can have you back on.
Thank you so much.
When I'm back in town, I'll definitely make sure that we can connect in real time. But until then, thanks again. And I want to thank all the viewers for coming and dropping in your questions in the comments chat. And we'll be back here at 3:15 for bars closing with Jim Cagnina. In the meantime, have a great trading day.
Thanks, everybody. Thanks, Tom.